Hey traders, Raghee here, and today we're going to do a little bit of a lingo techno-babble breakdown. And of course, if you're a trader, you know we love to give acronyms to everything, nicknames to everything, and it ends up in a lot of terminology that sometimes has lost its meaning or becomes kind of confusing. So I'm going to tackle one of the ones that I get the most of, which is what is the difference and when would we fade buy, or short for that matter, when would we fade a market or a fade buy versus a dip buy? What is the difference? Fade buy versus dip buy. All right, so with that in mind, let's talk about why we would want to focus on the long side of a market anyways. Now, the long side of the market is going to be the focus when we have the structure that tells us that it's been an established uptrend for some time. Double green, green over green on the JT multi, and dominantly green grab candles on the chart. I'm taking a look here at the daily S&P futures, by the way. All right. Most recently, the S&P futures have transitioned into, as you can see here, a yellow over yellow, which means not that the trend is broken, not yet anyways, but that the trend really doesn't have the same structure that it had in the green over green reading. The trend would be broken when we get at least two red grab candles, all right? Now, why is that trend versus no trend, and what would denote that trend versus no trend so important? Because I would still be a trend following dip buyer in the S&P. When we start thinking about fades, that means that we have seen the JT multi go yellow, and we've seen red, more than two, in this case, red grab candles appear. So we've got the yellow JT multi, we have the red grab candles. This is a fade buy. Now, the word fade and the word dip is less about whether or not we want to buy, because in both cases, I want to be a buyer. What it's actually reflecting is the underlying market environment, which we want to do has more to do with the environment. So there's still buys, but I'll use the terminology fade because now, and this is true for the Dow, we're in a choppy market. If I buy chop, I'm going to fade preferably the lower quarter of the range. So here's my high, here's my low, split it in half again, and then basically you have your lower quarter. That is going to be a fade buy, the fade because it's a chop. Now let's go to the NASDAQ, which is still in a very strong uptrend. We're not even lower than yesterday's low at the moment, but this would be solidly, confidently, a dip buy. No red, heck, hardly even any blue. Since June, we've only had two blue grab candles. That's how dominant this uptrend has been. We're nowhere near signaling even a neutral market. And keep this in mind. The precursor to a reversal, in a healthy reversal, is not, by the way, healthy reversals are not U's or V's. These actually do not occur without some major geopolitics or, say, central bank activity. For the most part, markets like to reverse with the good old-fashioned 1, 2, 3, or relatedly, say an M pattern. So 1, 2, 3s, 1, 2, 3 tops, and M's. In other words, we're going to go into distribution. The precursor to that, or something that will occur while we go into distribution, is the yellow lower row, or even yellow over yellow in the JT multi. So environment is everything. Environment is the difference between the way in which I would the terminology I'll use for a buy. A fade buy is a choppy market buy, and a dip buy is a trending buy. Not all moves lower are dips. The move in the Dow is not a dip, it's a fade. All right, and when you're building your trade, environment is everything. And when you're building your trade, differentiating between the kind of buy you're putting on or sell is really, really important. And you can check this update out over at countdowntrader.com. And by the way, I know it's a little early, but maybe not. It's only about 3 weeks away. I've got the next webinar coming up. So we'll be coming at you on October 6th, 8 p.m. And we're going to get into topics like this: daily time frame trading, sectors, how we focus on exits, and things like that. So again, think about fade versus dip, and remember, it's all about the environment. Get the underlying market environment right, and everything else falls in line a whole lot better. You understand the zones better, and you understand which indicators to trust for your entries a whole lot better. And that's the difference between dips and looking at fades. Hope that helps. A little terminology here today in the free update. I'll see you in the next one tomorrow. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.